Bismillah ar-Rahman ar-Rahim. Assalamu alaikum. Good morning to everyone. Once again, my name is Bilal Anwar. I'm the CEO of National Disaster Risk Management Fund. Thank you to everyone for our third webinar in the series. And we particularly want to thank everyone for showing this tremendous amount of interest, both in terms of joining in as well as staying all the way to participate in the discussion. Once again, the topic is super exciting, interesting, very relevant for the context and the situation which is going on in Pakistan, and similarly equally relevant for what is happening around the world currently. Today, the webinar is creating an enabling environment for disaster risk financing in Pakistan. This, in a way, is a continuation of our first webinar, which was also about the disaster risk financing, and we looked into the potential for disaster risk financing, the different instruments which are being applied and being implemented around the world. Today's webinar is more on the institutional side of it, and what kind of policy infrastructure as well as the institutional infrastructure is needed in order to have the disaster risk financing instrument to be implemented and play their role in Pakistan. Yet again, we have an excellent list of speakers and experts. Thank you very much to all of them for taking the time out of their very busy schedule and coming to this webinar to share their experience and their views to a larger set of audience. So we have, from institutional side, we have a representative, Dr. Wasim Khan, who is from Security Exchange Commission of Pakistan, a very important institution regarding the implementation of disaster risk financing instruments, as well as the institutionalization of these instruments in Pakistan. We have Dr. Muhammad Salim, who is Chief Executive Officer, Saudi Mortgage Guarantee Company in Riyadh. But previously, he was very much engaged, and he has worked in State Bank of Pakistan. So he's has a very good knowledge and experience in terms of what the State Bank is doing for disaster risk financing and green financing instruments. So Dr. Muhammad Salim is going to be sharing some views on that particular. From bringing a kind of international experience into it, we are extremely happy to have Mr. Raymond Zing, who is from Red Cross, Red Crescent, forecast-based financing, and he is going to be sharing some experiences and the best practices from other parts of the world and how we can learn in terms of the implementation in Pakistan. Similarly, we have the chairman of Insurance Association of Pakistan, Mr. Asfar Arshad, who is very important person in this whole institutional setup, because disaster risk financing is all about a disaster risk insurance, of course, along with some other instruments. But the insurance industry has to come up with the new and innovative approaches and work in this regard. Similarly, we are very happy to have Mr. Adrianos Works, who is working right now as a consultant with NDRMF, but he has been working in a number of other countries, especially from Africa. So he's been sharing with us some experiences from that side of the world as well. As you can see from the agenda, Mr. Dr. Muhammad Jahazeb Khan, the chairman of board of director of NDRMF, is to share and is to open today's webinar, but he has been called for another meeting by the Prime Minister, but he has promised to join in later, and he'll be sharing his remarks hopefully by the end of the webinar. So what are we going to do today? So basically the idea for this is, as I said, that this is today's webinar, the focus is about institutional and policy side of set of requirements which are needed for disaster risk insurance or disaster risk financing to be implemented and to be promoted in Pakistan. When we talk about disaster risk financing, it can play a very important instrumental role. It has a huge potential, especially given the scenario and the situation where the public financing can have a very limited role, or they are actually hugely squeezed in terms of the natural disasters, and then the recovery and relief and everything else, the cost of it, which the public finances has to bear to it. Now, there is another component of it as well, which is regarding the social protection, and when it comes to the vulnerable communities. Well, right now, Pakistan is going through the heavy monsoon period, and we are seeing the images, and we're seeing the news that a number of communities, a number of cities are facing high floods, and it's of course is coming with the huge damages to the local community as well as the public infrastructure. Now, in this kind of situation, the public, the disaster risk insurance components can play quite an important role, both from a macro scale sovereign insurance component as well as from a micro insurance side of it. We also know that, and you'll be hearing from the experts today that as well, that this is not an easy job. It's insurance, especially disaster risk insurance, is a complex instrument, and it needs some prerequisites, some institutional requirement for it to be fully realized and fully implemented. And so without really going much into I would like to invite our very first speaker, Mr. Wasim Khan, who's the Director and Head of Department of Insurance Division, Security and Exchange Commission of Pakistan. Mr. Wasim is going to be talking about role of SECP for creating enabling for innovative market-based insurance and reinsurance regime in Pakistan. So over to you, Mr. Wasim.
Thank you very much, Bilal Saab. It is my pleasure and honor to join you today at the third webinar on the disaster risk financing in Pakistan. I would like to thank NDRMF for hosting this important event at this important time. So I'm giving a presentation basically with the enabling environment for the innovative market-based insurance in Pakistan, what's the SECP initiative and what's the current status of the industry. Next slide, please. In the presentation, I will be covering broadly the policy framework for disaster risk and what is the current industry landscape of the Pakistan insurance industry, availability of the current disaster insurance in the market here, SECP recent initiatives in the enabling environment for the disaster risk. Other challenges the industry is facing and the challenges for developing the efficient disaster risk insurance market. Next slide, please. If we look at the pyramid of a disaster risk framework, it's cover basically the overall climate change and risk adoption strategy of a country, then the disaster risk management framework of the country, and the national budgeting for climate and disaster risk. And one important triangle is the enabling environment for disaster risk and disaster risk finance and insurance. So I will be covering the disaster risk insurance component and enabling framework. Next slide, please. So before giving into detail of the disaster, like what is the industry landscape of the insurance policy currently? Insurance currently and the gross premium of 433 billion in 2021. It's paid the claim about 189 billions, and total policies are about 10 millions. And currently there are 41 insurance operators in the country. 28 are the non-life insurers, 8 are life insurers, 2 are the general takaful operators, 2 are the family takaful operators, and 1 is reinsurers. If you look at the percentage of premium to the GDP, it's a 0.91%, is less than 1%. And internationally, it shows that we are at the very low side of the insurance penetration. If you look at the distribution side of insurance product in the life sectors, we have sectors properly divided into public sector and private sector. 90% of the public sector is distributed through the sales force, and the 60% of the private life insurance is distributed through the banca channels. And in the non-life sectors, The major is from the direct channels, from the sales for the direct channels. So this slide shows that the insurance industry still need a lot of development. Our penetration is 2,084 per person in the country. So this is also a very low side. Next slide, please. Life insurance sector. The total premium was 292 billion for 2021. Claims of 135 billion. Total policies are about 8 million policies are currently issued. 42% sector is private sectors. 58% is the public sector, which is basically state life and the postal life insurance. Private sector premium is basically coming from the banca channels, it's distributed to the commercial banks, and public sector premium is coming from the basically from the direct channels, their sales force. Majority of premium is coming from the Punjab, it's the 56% in the life sectors. And main policies in the public sector are the participating policies, and the main policies in the private sector is the unit linked policy. So these are the two main products different in the sector. Next slide. In the non-life sectors, total premium was 140 billions. And claim paid was 53 billion, and total policies about 2 million policies. Private sector constitute 86% of the total non-life sector's premium, and public sector constitute the 14% of the total premium. And non-life sector constitute 32% premium of the total industries. Main premium is coming from the SIND. If you look at the product distribution side of the premium, 27% premium is from the fire and property and damage. That's the main class of business for the non-life. 24% is the motor insurance. 15% is the engineering, and 14% the marine, aviation, and transport. And 12% is health and accidents. So main business in the non-life is basically the property, motor, and marine and aviation. Next slide, please. So what is the disaster insurance major products currently available in the country? These are the agriculture insurance, micro insurance, property insurance, and insurance of public asset. We will discuss in the next slide details of each. Please, next slide. Agriculture insurance, currently very small market, constitute 2% of total premium of non-life sectors. Currently, the crop loan insurance, crop insurance, livestock loan insurance, and livestock insurance, the main products which are currently available in the country. Currently, 3 government-sponsored schemes are running in the agriculture sector. One is crop loan insurance scheme, second is livestock loan insurance scheme, and third is Punjab Bima Fasal Program. Existing crop schemes focus on credit risk due to disaster losses incurred by the agriculture sector. In the next slide, we will discuss the government schemes in some details. Please, next slide. Crop loan insurance scheme is launched in 2008 with the assistance of State Bank of Pakistan by the government of Pakistan. It covers all the borrowers of the commercial banks and is covered the major crops, rice, maize, cotton, sugar. Premium is capped at the 2%, and it's fully subsidized for farmers up to 25 acres. The lending bank basically pay the premium and then reclaim from the State Bank, and State Bank reclaims from the government of Pakistan. Currently, approximately 700,000 borrowers are covered under these schemes. The yield trigger is basically loss more than 50%, and the notification of disaster in an area, then this trigger of the claim is issued. Next slide, please. The next scheme is basically Punjab Fasal Bima Program. It's launched in 2018 by the Punjab government. It's covered the lonely and non-lonely farmers, both 100% premiums for the farmers up to 5 acres and 50% premium for the 5 to 25 acres. There is a no claim bonus clause allows a refund of 90% premium back to the government of Pakistan. Claim triggers in this case in the national climate is 80% loss of the yield. Currently, 250,000 farmers are covered in these schemes, and this is launched in 27 districts of the Punjab. Next slide, please. Fire and property insurance. Fire and property insurance constitutes 27% of the total premium. Almost 99% of the property premium is written from the commercial properties, not from the industries and commercial side. Less than 1% is from the residential side. And normally the fire and property insurance covers the earthquake risk in the normal policy. Currently, there is no mandatory residential property insurance in the country. So apparently the commercial, the consumer side of the fire and property insurance will develop due to this. Next slide, please. Microinsurance. Microinsurance premium contribution less than 1% of the total industry. No specific disaster risk insurance products available. Currently, the credit life insurance, life and accident insurance, agriculture insurance, health insurance are the major products. Microfinance institutions, including microfinance banks and non-bank microfinance institutions, are currently distributing the microinsurance products. 31 MFIs are mainly involved in distribution of the microinsurance to its borrowers. Next slide, please. Public property insurance is the main major area. Currently, the National Insurance Company Limited designated insurance for public property as per the insurance ordinance, which constitutes
unmute करें अपने आप को. वसीम साहब आप म्यूट हो गए हैं, अनम्यूट करें.
जी, आवाज आ रही है?
जी सर, आ रही है.
So public sector property is basically insured by the NICL, and its major premium is coming from engineering 38%, marine and aviation 35%, fire and property is basically 20%. Next slide, please. What the initiative SSP has taken during last couple of years for the market-based insurance? One area was the digitalization and market development. So SSP is focused on availability of data, centralized availability of data. We have started the centralized information sharing solution for the insurance industry in 2014 with the help of Insurance Association of Pakistan and CDC. This is basically a centralized data of different insurance register of the claims. In 2014, we improved and added the health register in this data. And in 2020, we also added the centralized information registry of the life insurance policies. And now currently we are working with the IAP and CDC for auto insurance depository. And we also taking the matter with the provincial authorities for linkage of insurance industry for the death register to make claim processing more efficient. So one area that we are focusing that there should be availability of centralized data for the digitalization of the sector. We are also working on the regulatory regime for dedicated digitally only insurer. That is basically a full-fledged dedicated digital only insurer framework with low capital requirement, with low solvency requirement, and objective is to increase the retail consumer products to the mass markets.
Organising World Breastfeeding Week 2022.
And this framework will be currently in the final process of approvals. In the product development side, we have facilitated the MOU between the IAP and the CDC for distribution of product through the AMLAC channel based. That is the main distribution channel for the different financial products. We are also engaged with the Insurance Association of Pakistan with the industry image building through the centralized investor awareness programs. We are also engaged with the different insurtechs regarding digital distribution through different webinars and industry roundtables. Next slide, please. We are also working on the implementation of international standard and risk-based approach to improve the overall risk-bearing capacity of the country. SSP has started the implementation of IFRS 17 through phase manner approach. Phase 1 gap analysis has already been completed. Phase 2 financial impact assessment has been started, and first interim reports has been received by the Commission. The Policy Board of the Commission has recently approved the Insurance Amendment Bill, which will be submitted to the Ministry and to the Parliament for approval. The new bill covers the new concept of the market development and risk management of the industry. The new act basically covers a lot of simplification and deletion of number of rule-based requirements which were in the Insurance Ordinance 2020, and there were a number of enabling provisions for market enforcement, strengthening of education process, and product development rules and regulations. We expect that this new bill will improve overall the regulatory regime of the insurance sector in the country. We are also working on the risk-based solvency regime of the insurance companies. Technical working group has submitted the draft model, and the concept note on the revised risk-based solvency regime for the insurers is being finalized. The new regime will specifically cover the catastrophic risk charge under the RBC regime, and new regime will be shortly published for the public consultation. Next slide, please. In the agriculture sector, we have currently going a number of initiatives. SCCP launched this sandbox. Through sandbox, we are currently running a pilot run of the rainfall-based index insurance scheme. Salam Takaful is basically this pilot run in the Indian district for wheat crops, and in another product, TPL and Bank of Punjab and HBL has launched also a pilot project on the area yield index scheme in the Gujranwala, Hafizabad, Pakpatan and Sheikhpura district, which is covering the wheat, rice, and the farmer cultivation. About 25 acres are currently eligible for this. SCP specifically allowed the placement of reinsurance for this product outside the country. So these two initiatives will impact the overall agriculture index-based scheme in the country, and they will be able to launch this product on the full scale after going through this sandbox and through their pilot run approach. SCP under the National Financial Inclusion Strategy submitted a detailed report on the area yield index scheme to the Ministry of Commerce, which is basically covering the major crops, non-only and non-only farmers, subsidy for the farmer to 5 acres. And this scheme is the claim figure is 80% average yield of the last 10 years. In these schemes, we try to cover the shortcoming in the existing crop loan yield scheme of the State Bank of Pakistan. And this, we have submitted this detailed report to the Ministry of Commerce for further launching and taking with the relevant ministries. Next slide, please. In microinsurance, we issued in 2014 a detailed rules on the microinsurance, and now we are currently working on the issuance of the final rules on the dedicated regime for micro-only insurer with very minimum capital requirement, with lower solvency requirement as adequate to the risk of the insurers. And objective is to expand the microinsurance product over on the. And the product development side, we are engaged with the different market participants for launch of different microinsurance products. SCP recently approved very small ticket product distribution through the micro mobile network operators. We have allowed the special 5% additional commission for distribution of small products. So this area is also a focused area currently, and we expect that after the launch of this dedicated microinsurance regime will facilitate the depth of this market. Next slide, please. What are the industry trends currently we are looking at? Demand of property catastrophic insurance is likely to expand due to increase in the house mortgage under the Naya Pakistan housing schemes. We are also showing a growing interest by the insurer in the index-based schemes in the agriculture sector. We are also seeing a lot of interest for the digital distribution. We are receiving new licensing of the digital brokers, web aggregators. We are also seeing a lot of interest after the COVID in health insurance. Insurance companies are making the first touch point as the health insurance products. And interest is also coming from the foreign investor. Fifth pillar, we have allowed them fresh license to fifth pillar, which is Kuwaiti-based investors. Investment is coming, and foreign investor also take 14% stake in the TPL through fin funds. So we are seeing a lot of interest from the foreign investors in these sectors. Disaster microinsurance and SME insurance still need a focus. Apparently, there is a lack of public-private partnership in this area. Next slide, please. What are the other challenges despite these regulatory changes and all these things? Taxation issue of the industry, sales tax on insurance, health, personal lines, sales tax on reinsurance, multiple taxation on digital insurance is hugely impacting the affordability of insurance to the mass market. So a policy debate on taxation is needed for the expansion of the insurance industry in the country. The next stage is public-private partnership, collaboration between the public, donors, and private industry for the domestic reinsurance arrangement is an area which need further discussions, a challenge for the regulator and also for other stakeholders. And launch of mandatory disaster insurance of residential property in the country, which is highly exposed to the disaster risks in the area. And then is the insurance program for public assets. So currently NICL is mandated to insure the public asset, but there is no public property insurance program basically that's cover the overall public assets. One other area challenge that is for the development of the insurance and disaster insurance, the lack of risk information and modeling system to assess the economic and fiscal impact of the natural disaster, and limited access to probabilistic catastrophic model for the earth, typhoon, and floods. So these are the parallel changes which is impacting the overall enabling environment for the disaster risk insurance in the country. We need further debate on this public-private partnership, taxation issues, development of the model. Next slide, please. Thank you.
Thank you very much. Thank you, Wasim sir. Thank you for your very comprehensive presentation. So what we heard and gathered from your presentation is that a number of initiatives have been undertaken by SCCP as a regulator, and quite a phenomenal job actually, which is being undertaken by SCCP in terms of the market development. But we also heard, and we also know from the data, is the insurance density and the market penetration is in Pakistan across the range from for life and non-life insurance products is still pretty low. And when it comes to the disaster risk insurance, what we heard from the last couple of slides from Team Sir is there's a lot of room to be covered. May I request everyone to mute their mics? If you're not speaking, please mute your mics because there is a background noise which is creating a little bit of disturbance. Thank you very much. So, I mean, before I ask, I request our next speaker, Dr. Salim Saab, I would just like to highlight NDRMF is undertaking this work. We have been actually mandated to roll out and to pave the way for the market development for disaster risk insurance, particularly in Pakistan. And in this regard, we have we're working on a big product, which is the national level disaster risk financing strategy, which is still at the very early draft format. And we have engaged with a number of stakeholders, and some of them are actually on this panel today. And there's a number of other stakeholders who are very much engaged and providing their inputs and expert views in the drafting of that strategy. Once that strategy is developed, then of course one of the government institutions is going to be taking that strategy forward, and hopefully the strategy of course is going to be paving the way for the higher density and the more penetration of the disaster risk insurance, both at the macro level as well as at the micro insurance level for the country. And NDRMF of course is going to be continues to play this role in terms of the implementation and joining the hands and our partner like SCCP, State Bank of Pakistan, and Insurance Association of Pakistan to develop this market and come up with a number of other innovative instruments in this regard. Moving on, I'm very happy to welcome Dr. Muhammad Salim. Dr. Muhammad Salim have a long career. Right now, he is the Chief Executive Officer of Saudi Mortgage Guarantee Company based in Riyadh, Saudi Arabia. Extremely thankful for him to taking time. Prior to that, he has worked on a number of senior positions in Pakistan, including founder and chief operating officer for mortgage refinance company. And prior to that, he was with the State Bank of Pakistan. So having a very first-hand experience and expertise in this particular area. Over to you, Dr. Salim.
Thank you so much. Can you hear me very well?
We can hear you. Thank you.
Okay, so very well. Thank you so much for inviting me for this today's webinar. It's my pleasure to share my thought. It's a very important topic we're going to discuss, and I would like to discuss specifically the role of central bank in managing disaster. And when we say the disaster management, I believe it has two parts. One is a preemptive, before happening a disaster, what we can do, and especially what central bank can play a role. And other part is that the post-disaster, how we can manage that and how we can increase the investment and the flow of funds towards these areas as well. So my area will be specific to the central bank. So what central bank can provide its support and its role to promote climate financing and in increasing investment in environmental oriented project as well. And then we will also discuss so far what State Bank, being a central bank of Pakistan, has played its role in promoting climate financing and addressing this issue of climate change as well. So next slide, please. So we need to first understand the role of central bank. I believe that the participant of this webinar are not having a formal banking and the finance background. I thought it's very relevant that we should give a brief overview what the central bank has its main function and the role, so that we can understand in later stage what central bank can play a role specifically to climate financing and this disaster risk area as well. So first of the main responsibility of any central bank is inflation and price stability. So they try to control inflation through issuance of monetary policy by changing discount rate and the policy rate, which basically ultimately has an impact on a lending rate. So on that basis, a borrower can borrow money from the commercial bank. And the second role of the central bank is that they have to maintain a financial and the banking stability in the country as well. Means that no bank should collapse or no bank should be defaulting.
So I will ask what bit of that to make the assessment of.
So because a central bank is a regulator, they are the custodian of depositors' money. That's why they want to have a banking stability in the country. The third area is the exchange rate management, which is quite right now. So this is also the role of the central bank to manage exchange rate between the Pakistani currency and other currencies. And then payment system is also the role of State Bank. So these are role of central bank, but in some cases, we find that there is additional role which central banks are playing, especially the State Bank of Pakistan, India, Malaysia, and similar other countries. They are playing another role, which we call the developmental role. Developmental role means that they trying to promote specific areas so that there is a new investment, the flow of funds should move to those areas, like SME sector, agriculture sector, housing sector, and infrastructure projects as well. So in the case of specifically, when we study the role of other central bank, we find that the State Bank is also playing a role in the climate financing as well. I will discuss later later on what the state bank is doing in promoting climate financing and this addressing the issue of climate change and the disaster risk management as well, directly and indirectly. So we call it the developmental role, and by promoting these priority sectors, I already explained that these are also related to climate change and disaster risk area as well, like infrastructure, agriculture, SME, and housing as well. So these sectors are also has a link with the climate change and the disaster risk area as well. Next slide, please. So these are the general role of the central bank. Now we need to understand how is the banking sector relevant to the climate change. So I believe that banks can play a direct and indirect role. Direct role means that we are basically, for example, in Pakistan, we have more than 16,000 branches. And there is a frequent, customer dealings. They use electricity, they use paper, and all these things. We believe that if we promote paperless environment, if our branches are using the solar power, okay, so in this way they are supporting to the environmental friendly. This is the direct role that banks can play, that they should have a digitalization, they should have a paperless environment, they should have a and solar energy or renewable energy for their branches. So it can also promote clean energy in the country and can support the environmental sport activities as well. Indirectly, banks can promote climate change sport activities through lending to the business and industries, which include sectors like steel and the papers. They can provide cheaper investment to the disaster risk management areas and the projects as well. They can provide investment or the funds to the climate-oriented or clean energy projects as well, or water reservoir projects as well. So in this way, the banks can also play a role, and they should be discouraged to provide funding to those projects which are harmful to the environment. Like, for example, a coal-based project.
How
Or
is
anything
banking
which is
sector relevant to
anything which is dangerous to the environment, the banks should not provide funding to those projects. So in this way, indirectly, they are supporting our climate. They are supporting the environment. So this is the indirect role the banks can play. So I give you example. There are certain banks like Standard Chartered and other international banks. They have environmental policies. They have a risk management policy. In this is that they think that providing funding to the environmentally dangerous projects it's not their policy, and they are not supporting those projects as well. So next slide, please. So now, why we should promote green banking or climate oriented banking in the country? Because we believe that it has economic benefits. So once we promote clean energy, for example, it has a good impact on our economy and the social life of the people as well. And because of this awareness globally, this awareness is increasing about the climate change. So there are institutions, especially international institutions, so they think if they are involved in any environmentally harmful activities, it can create a reputational risk for those institutions. And that's why they are not involved in any such negative activities as well. So to protect their reputations, they are supporting the environmental projects and not involving other activities as well. There are certain regulators like the State Bank. I can say that I will share the example as well. I know the Indonesia, Bangladesh. These central banks have introduced mandatory rules and regulations that the bank has to apply those regulations, and they have to provide data and reporting to those regulators so that they know that any their regular
जी डॉक्टर साहब आपकी आवाज नहीं आ रही डॉक्टर सलीम साहब आपकी
Can you
आवाज
hear me now?
जी अब यस आ रही है अब आ रही है
रही थी, अभी नहीं आ रही है, पहले से नहीं आ रही थी।
अभी आ रही है and please everyone mute your mics except
बहुत
Dr.
ज्यादा
Salim
disaster है, noise बहुत आ रहा है। So there is another reason of corporate social responsibility. Because of these corporate social responsibilities, the institutions are involved in green banking and promoting development as well. The next slide, please. So now we specifically come to the role of central bank. Why central bank should involve in green banking and climate financing or disaster risk management initiatives as well. The first of reason is that to avoid systematic risk factor. What is the systematic risk factor? Means that if any bank involved in any anti-environmental activities, and there are penalties from international organizations or from the regulator, so this bank could lose the license. Okay, if couple of banks are basically involved in such activity, so it means that it could create a systematic risk in the banking sectors. If you just recall my previous slide, is that the main role of the central bank is to promote the banking sectors. So it means they will lose the sustainability in the banking sectors. So that's why the regulators are promoting environmental friendly activities, and they are encouraging that the bank should involve and lend to those projects which are environmental friendly. Because if due to any violation of rules and regulations, or maybe because of natural disaster or any climate oriented activities, if funded project is failed, the bank will lose the money. And if this project is huge and they have lost a couple of projects, so these banks will collapse. Okay, if many banks are involved in such activities, so it can create a systematic risk in the whole banking sector. That's why the regulator, the central banks are taking interest and observing whether these banks are involved in any anti-environmental projects or not, to avoid systematic risk. And then climate change concern is that, as I said, globally there is awareness about the climate change, and the banks and the financial institutions are taking interest as well. And that's why the central bank is issuing different prudential regulations and instructions to the banks. Okay, and simultaneously they want to promote sustainable development, and this is because of awareness of climate change. And we, for example, Pakistan and developing countries, we are so much suffered because of this import oil-based energy, which is not good for the environment, as well as it's very expensive. Now the trend is coming to promote the clean energy generation as well. That's why from 2013 and onward, the government of Pakistan is also promoting the clean energy through hydro, through air and water and all these things. And the solar energy is also available, which is now this technology is improving, and the people are more attracted to the solar energy as well. So these are the reasons that central banks are showing interest in climate-oriented investments and the projects as well. Next slide, please. Still, there is interest from the regulator, but if we see the data that shows that, let's take the example of Pakistan. So we have a 47 advances to deposits ratio. Means if bank is raising 100 rupees as a deposit, they are lending 47 rupees to the general public or to the projects as well. It means this, as I'm a trained regulator and the banker, I can understand from this data is that the banks are not lending money to the projects. They are more interested in deposits rather lending to the money. So there is a huge potential that if we motivate banks to invest to those projects, especially environmental friendly projects, so we can have a sustainable development as well as we can promote the environmental projects, and we can mitigate our disaster risk as well, because the funds will move to those projects as well. The next slide, please. Now coming again, narrowing the objectives, what specifically a central bank can play a role. I believe central bank has a four major roles which they can play. The first one is enabling a regulatory environment. They have to create a regulatory environment for the banking sector to promote investment in climate-oriented projects, or we call it the climate financing. For this purpose, they can issue a green banking guidelines. Because the banks always follow the instruction from the central bank. If there is no instruction or the guidelines from the central bank or the regulators, bank will not lend to the climate-oriented projects, or they will not go into the climate financing as well. So first thing is that they have to issue the guidelines and rules and the regulations and prudential regulations as well. Okay, so this is we call the creating enabling environment. If the message is coming from the central bank, okay, we are very much interested in a disaster risk management and we want to promote the climate financing in the country, then banks will have to follow that. So this is the first thing the central bank should do that. The second thing is the market development. So through market development, they can provide funding to the commercial banks and ultimately to the projects. For this purpose, what a central bank can do? Central bank can basically establish a credit guarantee facility. Why? Because the commercial banks, for commercial banks, the climate financing and disaster risk management area is a new area. It's a new concept for them. They will be reluctant to lend money to those projects. To motivate commercial banks to lend to the disaster risk management area, they want a hand holding from the central bank. How they can get the hand holding? Through risk sharing basis. We call the risk sharing basis, or we call the credit guarantee. For example, I'm a CEO of a Saudi mortgage guarantee company, and I established a SME credit guarantee company in Pakistan. The whole idea was that if banks lend money to the mortgage financing or SME financing, and this borrower is defaulted, the bank should get the claim from the central bank. Means someone is sharing their losses. And this gives a very big incentive to the commercial banks, and then they, on that basis, they lend money to the disaster risk management project or climate financing project as well, because they know that, okay, we will not lose the money. Someone is there to support them, and that should be done at initial stage. Okay, and then central bank can give a percentage, or what we call the mandatory target to the commercial bank. Okay, let's 2%, 3% of your total portfolio of advances should go to the disaster risk management program or climate financing projects as well. So this will basically force the banks to lend money to the disaster risk management projects, or we call the climate finance or environmental friendly projects as well. So this is also, the stick and carrot policy from the central bank perspective. Through credit facility, basically they are giving a carrot to the commercial banks and motivating them, incentivizing them. Okay, lend money to these projects. In case of loss, we are here to support you. Okay, through mandatory targets, they are giving a stick. Okay, you have to lend money to those projects as percentage of your total portfolio. Because
apologies, I'm sorry to interrupt, but can I kindly request if you can speed up a little bit, because we have
yes,
we have 3 more presenters just for the time management. Okay. Sorry.
And then public financing schemes, they provide cheaper funding to the commercial banks so that they can use this money to lend to the environmental fund. So they can establish a financing window. From there, banks can borrow money and then further lend to the climate-oriented projects as well. The fourth thing is that they have to create the awareness. They have to provide the training to the commercial bank so that they can design the projects, they understand the projects, and then they should be able to finance those projects. So, and the simultaneously, they can arrange awareness sessions and training program for the vendors as well, who can understand how they can get the money from the banks to support their projects as well. Next slide, please. Next slide, please. So now at the end of the slide, I'm giving a brief initiative history. The State Bank has been very active in promoting climate financing since 2013. So they have issued branchless banking guidelines, and they are promoting branchless banking, which will reduce the paper, digitalization, and energy efficiency solution as well. State Bank specifically launched a refinance scheme to promote clean energy projects in 2013. It is very successful. The banks are getting money at 2%, and they are lending to the end user at 6%. And just remember, market rate is around 20%. It means that almost 14% indirect subsidy is given on a clean energy projects as well. State Bank is a member of the Sustainable Banking Network. Through this network, all the regulators are the member of this network. And through this network, they are trying to promote the sustainable development and climate financing as well. And we are trying to promote cogeneration biogas projects as well. And State Bank recently promoting digital banking, which will also promote the digitalization of banking services as well, which will reduce the paper consumption, electricity consumption, and it will be more efficient banking as well. Next slide, please. Thank you so much. If you have any questions, feel free.
Thank you very much, Dr. Saab. Thank you. Very informative. And yes, we do recognize a very important and instrumental role for the State Bank of Pakistan through their number of initiatives, as well as their mandated functions. They can play a very effective role in that. Before I go to our next speaker, I just want to, there's a specific question from Ms. Afia Salam, but we'll just take note of that question, which is about the capacity of the national banks to evaluate the environmental credibility or environmental aspects of a given project before the financing. So you may want to note this question, and we'll come at the end of the Q&A session. Moving on, we are very happy and pleased to have Mr. Raymond Zing, who is Regional Forecast-Based Financing Coordinator for International Federation of Red Cross and Red Crescent Societies, IFRC. Mr. Zing has quite a widespread experience in the Asia-Pacific region, and which I'm sure he's going to share with us today. Over to you, Mr. Zing. Thank you very much.
Good. Thank you so much for the invitation. I'm very, very happy that I can share some insights from the Red Cross, Red Crescent. And I'm going to talk a bit more about financing for anticipatory action, because I think that's an interesting, I guess, aspect of the broader disaster risk financing spectrum that we can look at. Next slide, please. Yeah, anticipatory action. So why am I talking about that? Because if you click next, it fits into the disaster risk reduction part, but also the climate change adaptation. So there you see anticipatory action, the way we use it in the humanitarian field is really to address the short-term climate change impacts, but also the longer-term strengthening of preparedness and capacity on an annual basis. So just as a background, next, please. Does anticipatory action make a difference? Yes, it does. If you again click next, you see we have done a number of statistical impact evaluations that show, yes, if you do take anticipatory action, it reduces the impact ahead of a hazard, but also it reduces the cost. So if a humanitarian partner, development partner, but also if a government takes anticipatory action, it is a more effective, more cost-effective way of providing assistance. Next, please. Maybe how does it make a difference? For example, we have done an impact study in Bangladesh for flood, where it shows that, for example, 30% of people are less likely to take up new high-interest loans. It also to reduce stress and anxiety. If you click next again, there's an example from Mongolia, where we will see, for example, also in Mongolia, we work on Zoot, which is a cold wave. If you click next. Yes, so there you see, for example, the increase of offspring survival rate. So that's the livestock increases by 5% and so on. So you see, I mean, there is evidence that anticipatory action makes a difference. So that's why it's a good idea to invest in that. And next slide, please. This, I just wanted to show you a bit from the Red Cross Red Crescent site where we work on anticipatory action. So it goes all the way in Asia Pacific, at least it goes from Pakistan to Nepal, Bangladesh, Myanmar, Mongolia, and so on, all the way to Philippines and Solomon Islands. But you also see there actually that we don't work in isolation. We also work with the UN, we work with the START network, which is the conglomeration of INGOs. So you see there is a lot of momentum when it comes to anticipatory action. Again, I guess it is a very interesting ex ante financing mechanism. Next, please. So financing, I just want to give you that as an example. How do we at the I4C finance anticipatory action? We have the Disaster Response Emergency Fund. Next. It was established in 1985. It is used for all Red Cross Red Crescent societies for anticipatory action and response. The most important thing that I want to show here is, yes, we do have a fund that provides assistance or finances, and there is a commitment that we scale up, or that at least 25% of allocations are for anticipatory action. So just again to showcase a bit, yes, there is that commitment that anticipatory action is a better way of using funds for humanitarian response. Next. But then what are some of the parameters? I mean, how can you use funds if they should be used for anticipatory action? What we say is that any action needs to happen before the hazard impact. So before a typhoon, before a flood hits, or before a cold wave, and the actions need to prevent or mitigate the impact before. So it's not response, it really needs to reduce the impact beforehand, and there needs to be some sort of a forecast or a trigger that then releases the ex ante financing. Next. How to access the DREF. So how to access funding for anticipatory action. at I4C, we have an early action protocol, which is a pre-agreed plan that really outlines when we are going to implement early actions, how much it costs and where it's going to be, and how the money gets there in time. So I think just, again, I think that the most important is really that we have a pre-agreed plan. It needs to have the financing in place, and it needs to link to a trigger that then triggers the early actions next. We have the early action protocol, which gives a national society, so for example, also the Pakistan Red Crescent could access that. It gives up to 500,000 Swiss francs, and a minimum of 10,000 people needs to be targeted. This is for extreme events, so we want to make sure that if there is an extreme event, it's not just the annual flood, but if the impact is a bit higher, that then the Red Cross, Red Crescent societies can access that. Next. There is also, we have a simpler way of accessing money, which gives, for example, again, the Pakistan Red Crescent or any other Red Cross, Red Crescent society, 200,000 Swiss francs, and a minimum of 2,000 people need to be targeted. And this is for the slightly above average events, so not for the extreme events. And there's only a simple trigger, so it can be just a forecast. Then also what we also have is the imminent REF, which is 150,000 Swiss francs weather, non-weather events. It has a bit the same mechanism, but it's just much shorter. So the simplified early action protocol and our early action protocol are really plans that we put together well ahead of time. Next. Yeah, here you see the overview. I just want to show you that. I mean, I think the details maybe are not so interesting for you, but what is, I think, important is that we have plans that are in place and that are linked to financing. This needs to be already agreed. We can't wait for something to happen and they say, oh yes, we have this plan, let's take it, let's look at it again. Where's the financing? Oh, we don't have the money in country and so on. So this all needs to be pre-agreed. That's my main point for this. Next. Also, the no regrets approach when it comes to anticipatory action. So even if the forecast is slightly wrong, it doesn't really matter. We're not saying that we need to return the money, because forecasts are good enough. If there is a forecast for a flood, the flood is still going to happen. It might not happen as severely, or might not exactly be in the location that we thought, but still people will be affected, and the money that is used for humanitarian assistance is still very effective, just to let you know. Next. Good, then I think there you have to click a couple of times next. So if you have a average event, for example, there's the imminent REF. If it's above average, we have the simplified EAP that releases early actions. If you click again next. For the extreme event, we have a full early action protocol, again with early actions. And if you click once more, you also see that we actually have annual readiness and pre-positioning costs that are really the capacity building for implementing then early action. So I think that that's another aspect that is quite important, that normally partners, but also governments, we need to have annual money to make sure that we have the capacity and build the capacity to implement when something is going to happen. It's normally not enough to have money in place for something that is going to happen. We need to have that capacity building element in place as well. And I think that's what's really almost unique with our fund here as well. So just to show you that in a different way. Next. Yeah, I also wanted to mention actually the Anticipation Hub, because the Anticipation Hub is a global platform that brings together all the partners, governments, scientists, practitioners, policymakers from or that are involved in anticipation. We have now, I think, almost 100 partners, including, for example, ASEAN, governments, national Met services, the UN, of course, Red Cross, Red Crescent, and so on. We all come together and share knowledge and learning. And if you click next as well, we also have learning, for example, on disaster risk financing. So what are useful mechanisms that we can promote further from other regions, for example? Where can we work better together? There are different working groups that we can also link up to and so on. So just I wanted to highlight that as well. And that's actually already it. I'm happy to expand on anything, but I know I have only 10 minutes. Good. And I think if you click next, then that's the last slide. Yes, there. Yeah, feel free to get in touch for any questions. Thank you.
Thank you very much. Thank you, Mr. Singh. Very, very interesting, very informative presentation, and which basically shows in an extremely practical manner that forecasting-based financing can work, and it can work in a layered disaster approach manner, which you've shown. Early action protocol, simplified early action protocol. I think these are very practical ways for us to learn from it and try to integrate into our own financing mechanism as well. I'm sure there are a lot of questions, but we'll come to that in a Q&A session. Moving on, we have Mr. Asfar Arshad, who's the chairman of Insurance Association of Pakistan in Islamabad. A very relevant and highly relevant actually institution in this whole area. Mr. Asfar is the chairman of insurance, but he has a long experience in this particular sector, and I'm sure that he's going to share with us what is IAP is doing in particular to help out and to increase the share of insurance in Pakistan and disaster risk insurance in Pakistan. Thank you.
Thank you, Mr. Bilal Anwar, for conducting this very useful workshop and seminar. And thank you for inviting me to share the insurance perspective on disaster risk financing insurance in Pakistan. I'm cognizant that we are running above time, and I'll try to limit myself and restrict myself to the allocated timeline that you have provided for me. So coming straight to the point, any disaster risk strategy or disaster risk framework will only be successful if we truly understand the frequency of the disasters that are unfortunately impacting us, our country, and the severity in terms of the impact, the financial cost or the economic loss that the disaster results in. And that is, I think, will be very useful if any solution is to be understood. And if we can just move on to the next slide, which will give an idea to all concerned. These are some of the major disasters that have impacted, natural disasters that have impacted Pakistan over the last several years. A few major earthquakes you'll see are there, and obviously weather, rain, and flood events. It does not capture the major losses that the country experienced in 2020. The southern province of Sindh was heavily impacted, and obviously the current ongoing season, and the expectation is the rains that are happening all throughout the country. There again, there will be severe losses. But within this, if you see, you will have billion-dollar events in this chart, right? You have the largest one was the 2010 earthquake that we had, which impacted, 2000 flood that we had, which impacted the entire country and resulted in severe, not only economic losses, but also loss of life and damage to property as well. One important thing that you may not notice from this slide is if you look at the dates, so a lot of these events have actually happened over the last 20 years, in the 21st century, starting from 2005, the earthquake that we had, and then and within that last 20 years, if you again cut that into 2 10-year periods, you will see an exceeding number of weather events, especially happening over the last 10 to 12 years, especially the weather events and as well as the earthquake as well. And this is the point that I think it's very critical for all the strategy holders or the people who are designing the strategy to understand, because when we say the climate change is real, I think this slide very clearly depicts that it's not only rare, but Pakistan, unfortunately, has been impacted by this in a much larger, in a much bigger way than perhaps some of the other countries. And obviously, when studies suggest and when studies say that Pakistan is one of, ranks one of the top 10 countries which are impacted by global weather events and climate change and climate warming, I think we see here a demonstration. That is actually a fact. Some people don't tend to, give it the seriousness which it deserves, but I think the statistics and the information is very clear, and it's very clear out there to see and to understand. And from the forecast that we see, I think these events will only increase, not only in frequency, but also in terms of severity of economic loss, severity of property damage, severity of livestock. So what are the things that are impacted? Obviously, when we talk of earthquake, I think mostly it's unfortunately the human life that is impacted, and properties that are impacted. And in terms of weather events, floods and rain, I think yes, impact lives are also impacted, but more than that, it's basically the agriculture sector that is very heavily impacted, especially within the agriculture sector, the crop subsector. As you see, if it happens either in the Kharif or the Rabi seasons, a large, standing crops are washed away and stuff. And which brings us to, although agriculture in terms of our overall GDP only has around between 19 to 20% contribution, but I think the role of agriculture is much more critical and much more important than this 19% contribution that it makes. And it provides the food security to our country. I think we'll stay on that slide, sir. We'll stay on that slide. Yeah, because that's the major chunk. I think I need people continue to see that. I think it's going to make more sense. So agriculture, not only in terms of its contribution of GDP, but more importantly, the food security component that it provides, that is very critical. And then it is, in terms of livelihood, it provides, in terms of various sectors, the various studies which show upward of 40% of the labor force of Pakistan are directly involved in agriculture. And if you add those who are also indirectly involved in agriculture, the figure goes as high as 55 to 60%. So a lot of people actually are impacted when the agriculture food chain is impacted by any of these events. So how do you, the risk is very much there. How do you finance that risk? How do you reduce the impact of obviously those risks? Obviously, there are long-term strategies. I think some of my previous speakers have highlighted that in terms of financing more environment-friendly projects and aspects from the banking sector. But these are rather long-term solutions. In terms of short-term solution, as I mentioned earlier, I think what is critical. One thing is very clear. We have empirical evidence that the frequency of events are increasing. The next critical thing I think that is important, and where I feel that the Pakistani in the community is lacking, we do not have a proper forecasting model. I think this was highlighted as well in Mr. Wasim in his presentation, in where in one of the slides he did mention that SCCP and some of the other organizations. I understand. I've been part of a few other such similar gatherings. NDRMF has been working with them. I think it's very important to have a model, a catastrophic model, a flood model in Pakistan, and an earthquake model in Pakistan, which can give an impact or try to estimate the financial impact of such events in Pakistan. Currently, I think, unfortunately, there isn't any such model. So a lot of work needs to be done, because once that impact will be clear, I think that is when the government will be, it will be very useful for the government to form a strategy of how to address those risks. because there are a number of solutions, obviously, and for a country like Pakistan, where I think the financing is not something, extra financing is not available to the government. I think it will most probably be a mixed approach that will needs to be taken. Which by mixed approach, what I mean is there would be some component of the risk which will be absorbed by the insurance industry and the reinsurance industry, and then certain component above that will obviously overflow to the government, for which some sort of fund or some other solutions will be considered. So in Pakistan, I think we have mentioned earlier, the insurance industry is playing its role in terms of providing some basic crop insurance programs. And I will just highlight this. The flood that you see in 2010, which impacted the entire country and resulted in economic loss of more than 10 billion. I think just before that, I think just 1 year before that, the insurance industry, along with SCCP and the State Bank of Pakistan, launched the crop loan insurance scheme. That was the first time such a huge scheme was launched in Pakistan. And right after that, we had these floods happening. And to that extent, obviously, the scheme did pretty well. It paid out, but obviously, it was a restrictive scheme in the sense that it only had the maximum aggregate limit of liability was 300% of the premium. So it paid out to that extent, and obviously much more was needed. The idea of that scheme was, after learning over a 4 or 5 year period, I think that scheme would graduate into a national crop insurance scheme or a yields based scheme. Unfortunately, that has not happened up till now. Various presentations have been made both by the SCCP as well as the insurance industry to the government to graduate from the crop loan insurance scheme to a national agricultural insurance scheme. But obviously, there are some issues in terms of financing and all those stuff that are needed to be sorted out. A scheme has been launched in Punjab, the yield-based scheme, which currently is operating in 27 provinces. Hopefully, that is something again which can be enlarged. The insurance industry is also providing the livestock insurance. But as you see, livestock is not something which is, as prone to these natural calamities as earthquake and rain, because the community that holds that they in terms of flood, they can migrate, they can immigrate, and so. But that insurance product is available. Micro insurance is again very critical. Insurance policies, micro insurance policies are available. Insurance companies are offering that along with microfinance institution, and they not only work in terms of these national community, but just recently, last couple of years, we have had this very huge, global pandemic, and again, I think the micro health insurance, especially, has been very reactive, provided coverage to a lot of people in the rural community to reduce the impact of those losses. So I think in short, climate change is rare. Pakistan is prone to disaster. The need for a disaster risk financing is very much there. Some effort obviously needs to be made at every level possible, and the insurance industry will and continues to play its due role, talking to our regulators as well as various government bodies to set up number one, this modeling, so that disaster risk model can be made. A Pakistani disaster risk probabilistic can be made to understand the impact and then design insurance and reinsurance products accordingly. So this is basically, if you can move on to the next slide. I think I've covered most of it already, but I just see if I've missed anything. I can, yeah. I think these are the various and drought. Yeah, drought is another, I think, area that we need to consider because it doesn't capture the imagination, because it's not a very major event which comes, or a sudden event which is covered by the media. But again, I think insurance products to alleviate the impact of drought is also very critical. Another thing that I would want to say is, in terms of within the insurance product, what sort of products are most useful. I think a very clear understanding needs to be inculcated here as well. There is talk of a lot of index-based insurance products and the various pilots that are happening in Pakistan. But I think one thing that we need to understand is when we talk about index, the variable that we are talking about is very critical, right? So an index-based product could be rain could be an index, temperature could be an index, yield could be an index. So I think a very clear-cut definition and understanding is very necessary, because for Pakistan, the unique nature of its agriculture is a lot of our agriculture, 80% of agriculture is what we call canal fed. Nehri Nizam. It's called Nehri Nizam, I think, Urdu. It's based on the canal metaphor. And only 20% is Barani, which is basically rain fed. So the impact of rain, direct rain, is not prevalent in a lot of the areas. So an index, a rain index will always work well in the Barani area. It will not work that well in the canal system. And a good example of that is 2000. If I think most of us would recall, although the entire country was impacted, the rain actually happened in the northern part of the country, in Kheti and that area, northern areas. That is where the most of the rain happened. But the impact of that was felt throughout the plains of Punjab as well as Sindh, although there wasn't much rain there. So obviously an index product, if there would have been an index product at that time, that may not have triggered in Sindh or Central Punjab. So we need to be conversant with what sort of variable is being used and what sort of the yield index, for example, it's very, very relevant to Pakistan because any drop in yield due to whatever reason, it can provide the relevant feedback. And the scheme that is running in Punjab for the last 4 or 5 years now, quite successfully, takes yield as an index. So sort of insurance product to the extent of insurance and the extent of disaster financing by the government, these are critical things that I think more study and more work and more discussion needs to happen around this. So thank you very much.
Many thanks, Mr. Asfar. Very rightly mentioned all the challenges which are being faced, several kind of critical institutional policy gaps, which are the reasons that the insurance and the different insurance products have not evolved up to the level which are needed in the market, and given the vulnerability and the challenges and the exposure which Pakistan is facing. You mentioned about the no forecasting model, especially when it comes to the risk assessments or the loss estimation. Just want to take 20 seconds to mention that NDRMF as part of its mandate is actually working in this direction as well. We have acquired an application from Sparkle, which is called the NetCat model, and it covers the areas. The module basically hazard, vulnerability, exposure, floods, drought, tropical cyclones, and a couple of other areas as well. And one of the critical component of this NetCat model is the loss estimation. So that might be one specific element which can actually help and fill that gap in terms of the loss estimation and the risk assessments for the insurance industry to build their different insurance products. So we'll be very much working, and we'll be very much looking forward and inviting all the experts like yourself and many others to help us out and to work in a collaborative fashion. This brings us to the last presentation for today. Before we go into the question and answer interactive session, we're happy to have Adriana Works with us, who's an international consultant, have a huge amount of public and private sector experience in Europe, Africa, and Asia, working with some international and regional banks and agencies, especially the World Bank and the African Development Bank. If I'm not wrong, he's currently engaged in some very interesting work in a beautiful country, Namibia. So Mr. Works is going to be talking about some world best practices on climate disaster risk financing and how it can be incorporated and applied in the specific context of Pakistan. I would like to request Mr. Ardianos to be focused so that we can finish this in a timely manner and have some time for an interactive session. Thank you.
Thank you very much, and good day. Yes, I am in Namibia, quite a distance away from Pakistan at this point in time. Yeah, so my presentation really is an overview of best practice when it comes to disaster risk finance, and we start with basically I've split it into two. It's split into what the public sector does and what the private sector does, and how we can incorporate or collaborate between the both of them and actually have a coherent system that stands the best chance of reaching our objectives, so to speak. Next slide, please. Very briefly, we can just quickly go through this. What is disaster risk finance? So from my point of view, and generally, disaster risk finance is a key component of a much broader disaster risk resilience strategy. And disaster risk resilient strategy is a strategy that really seeks to strengthen the resilience of any country by managing the risks, being ready to respond to and recover from emergencies, and by enabling, empowering, and supporting individuals, organizations, and communities to act for themselves and others. This is you know, essentially what we're trying to do. Next slide, please. What are the components of disaster resilience? Physical resilience. So we want to have strategies in place that reduce risk and prevent disasters through planning and building better and more stronger infrastructure, so to speak. Social resilience, obviously, to help people after disasters, to cope with disaster shocks, so that there is recovery and there's no that we minimize loss of life and loss of income and loss of livelihood. And of course, financial resilience, which is the key issue here with disaster risk finance, that is you know, that allows us to have reliable and predictable funding to reduce, well, first of all, to address the disaster shocks, and to reduce fiscal risk, you know, risk that the government, you know, has to reallocate funding from other priorities. Next slide, please. So this is just a basic overview of all of the different aspects of a disaster resilience strategy. You can see that we have different disaster stages pre-disaster, and then post-disaster, which requires emergency relief and response, and then longer term after disaster, which really requires reconstruction and rehabilitation. And in these different stages, we all need the same sort of information or the same sort of components. First, data and analytics. You know, what we need information to make proper decisions. We need money. So disaster risk finance is needed for all of these different stages. The theme of today, we need institutions and operations that are effective to ensure that our activities within each stage are responsive. And importantly, we'd like to have a monitoring and evaluation framework that enables us to better our future endeavors. All of this should be supported by a sensible legal framework that carefully assigns responsibilities and so forth. So it is quite a a large undertaking, you know, so all the way from the policy to the implementation, there's quite a bit to be done. Next slide, please. So key issues are that we have, you know, pre-disaster activities, which is mainly sort of preparation and ensuring that that our activities minimize the impact of disasters. And the financing of this typically comes from normal budgetary allocations. So government would allocate funds for pre-disaster activities relating to just preparation and just building better infrastructure, so on and so forth. This is all pre-disaster funding, and typically this comes from government. Post-disaster, on the other hand, is you know, what happens and how do we finance emergency response and long-term rehabilitation and reconstruction, and that because of its uncertainty requires disaster risk financing tools, contingent financing tools, and insurance tools, and is typically the subject matter that we're on. Next slide, please. So the key issues with post-disaster finance is the availability of sufficient funds and the efficient response. So one of the key problems that historically has been faced post a disaster is that it takes very long to mobilize funds and so on and so forth, only exacerbating the impact of the disaster. And related to that is, even where there are funds available, the mechanisms and the operations for ensuring that these funds actually get to the relevant people and the affected areas is somewhat inefficient. So disaster risk finance, you know, should aim to address these two key issues: the immediate availability of funds, insufficient funds, and the efficient response once the funds are available. Next slide, please. So what do we need to meet those objectives? We need information, and I'm glad it was just now discussed, you know, that the you know, loss data, exposure data, probability data is in process. Also, the timeliness of funding is key. That you know, we do need funds. We need to understand how the funds need to be dispersed. So, you know, not everything is needed in one go, but we do need to understand the signature or the timing signature of when funds are needed. We need to have strategies around the disbursement of funds. So it's really important to ensure that the disbursement of funds is properly targeted and is timely, and so on and so forth. Next slide, please. And in terms of the type of funding that or finance that is available, that we adopt a risk layering approach. I'm sure you've all seen this, where for you know, at the first level or the first line of defense are sort of funds set up by government, which we call simple reserves, and thereafter some form of contingent credit, followed by insurance, possible capital markets solutions, and then at the top, international donor assistance. So where we position everything is country dependent. It's dependent on the resources available. It's dependent on the local insurance capacity where they participate, etc., etc. So this is something that really needs to be investigated and considered, and is in fact the crux of a public sector disaster risk finance strategy. Next slide, please. we have several different type of disaster risk finance as instruments. As you can see, you've got ex-ante financing instruments, which which in effect are arranged before the disaster happens. And we've got relatively inefficient ex-post financing instruments, which is exactly what we're trying to avoid. After you have a disaster, if you then go and look for funds, it is highly inefficient. It's very expensive, quite simply because the opportunity cost of the funding that you're looking for is typically high. So budget reallocation comes with costs. Quick borrowing comes at a high cost. Tax increases at a time when there is a disaster comes with costs. So these are not pleasant. So we really want to move most of the financing to ex-ante financing instruments. So next slide, please. So that was the public sector overview. I believe that the private sector should also play a role. The public sector can only provide typically emergency response and provides the minimum or a safety net in terms of response. Anything to ensure 100% recovery needs to be augmented by the private sector, and that's why I'm glad to see that there has been quite a bit of talk this morning or this afternoon in your case on the role of insurance. So next slide, please. So my approach to this, typically for developing countries, is, how do we merge disaster risk finance and insurance with inclusive insurance? And I think that is important, because we don't only face disaster risk as a problem, we also face that the insurance industry has not fully developed or has a very low penetration rate, as was given in the first presentation this morning, during this webinar. So what is inclusive insurance and finance? Essentially, this is finance and insurance that is specifically targeted to the underserved, unserved, vulnerable, or low-income populations, as well as micro, small, and medium-sized enterprises. And in developing countries, this is typically done through the development of appropriate and affordable finance and insurance products that can be sold either as microfinance insurance, or traditional finance, or insurance, or both. So meaning that it doesn't necessarily have to be done under a microinsurance license, but more importantly, it should just be available. Next slide, please. So what are the key ingredients of a proper insurance or inclusive insurance and finance product? It needs to be useful. So does it address a specific need? It needs to be affordable. So can the people afford it? And it needs to be accessible. So these are the key issues that need to be considered when developing these products. Next slide, please. So what are the strategies? We need simple products. We need new distribution channels or aggregators. We can leverage on technology. There's a lot of technology, fintech, insurtech that can be leveraged. And of course, because of the affordability issues and the pressure on prices, we need economies of scale. So next slide, please. So this is a key aspect. One is that you see the public sector disaster risk finance deals with prevention, preparation, response, and recovery. My view is that private sector disaster risk finance and insurance can only really properly deal with recovery and response. So that's something to keep in mind, and it's important to, when we're looking at recovery and response, to consider both public and private sector disaster risk finance. Next slide, please. So what are we looking for Pakistan? In my view, next slide. An effective and responsive disaster risk finance strategy will consist of a public and private sector disaster risk financing framework supported by the necessary legal and policy framework, institutional framework, and data and analytics. And the next slide. Here you have it. This is more or less what I think is needed. A legal and policy framework that covers the entire spectrum, both public and private, for disaster risk finance. Strong institutions and institutions that are involved in the delivery of public and private disaster risk finance. The availability of data so that the private sector can participate, and that the pillar is, or that the disaster risk financing strategy has both a public sector focus and a private sector focus. And as was mentioned, in between them, public-private partnerships to ensure that there is a proper collaboration and economies of scale are achieved. Thank you very much. That is my brief presentation.
Thank you very much. Thank you, Andreas. Thank you for sharing some of the practices which are being applied around the world, and then giving us a way forward for Pakistan. Before we move on to the Q&A session, I think we have Mr. Muhammad Jazeeb Khan with us, who is the chairman of the board of directors of National Disaster Risk Management Fund. We are very privileged to have him, and he has spared some time to share a few thoughts with us. We'll give the opportunity to Jazeeb Saab. So, and then afterward we'll carry on with our Q&A session. Sir, over to you. Unmute karo, Kasim. Oh, this one. तुम अनम्यूट नहीं कर सकते?
उनको डायरेक्ट मैसेज कर दे सर इधर से चैट से.
Sir, can you unmute yourself, Jazeeb Saab? अपने माइक को unmute कर दें, please.
She's connected.
From this resource is that now you're not giving more project mitigation because in the past when we start in process of discussing
The connection dropped.
Yes, please. We can hear you.
NDRMF for.
So that's a very good signal. Now, and also because people are understanding.
We're doing this very timely exercise.
So maybe we can
webinar with some of the
So thanks for this exercise.
This very timely exercise. Water that in the
division on risk assessment and adaptation strategies. European Climate Change Sector in Italy. He's also part of the United Nations Disaster and Risk Resilience Science and Technology Advisory Group. And he's also been participating in the World International Mechanism on Loss and Damage.
Sorry, there seems to be some connectivity issues. I apologize for that. So I was saying that the disaster risk profile of Pakistan is very well known. The challenge is understood. Several eminent researcher and scholars have already underlined the threat that we have. So that need not be restated, but I would echo and emphasize it again. And being part of the 10 hotspot countries, and then our state of readiness. I think these are two key things. So combined, they create a huge challenge and also potentially a situation, and we might not be very well prepared to face these disasters. The other consideration is that this is happening as we speak. So it's not in the future. This is not something that can not be predicted in terms of its anticipation. It's happening as we speak. There are patterns, climate change, which are affecting each aspect of life in our region, and we should be mindful of that. My first sense is that, of course, there is need for disaster risk financing in additional instruments and new kind of products that would help countries like Pakistan to not only access this financing, but also to utilize it in an effective and meaningful manner. While we should be doing this, also it's important that the mainstream public expenditure, particularly I speak of public expenditure, but also of subsequently private investment, is done in a manner that it creates that resilience, which is so desperately needed. Whatever additionality is over there or new products do come in, those would be in the form of additional measures. But our own spending, our own expenditures must be aligned with this, this urgent task at hand and this challenge, which is, I think the speakers happened to hear the last one. I'm sure the other ones would have mentioned this, the importance of data and sharing data and to be able to connect data. This has been mentioned and I'll restate it. And we have particularly a more serious challenge due to coordination, I might say failures between various agencies of the government as well as between various tiers. So we are a federal country. I also have a local government system. It's a large country, large population. So coordination is a serious challenge, and I like to flag that. The overall resource availability is also insufficient. That's another known, and that makes the situation more complex. And then there's excessive retention of risk on the government budget. So the government budget is loaded with a lot of risks, and these are further accentuated by the challenge of disasters. Now, to do this, I would identify or point out to some priority areas. I think there is a need to quantify the funding gap for natural disasters by identifying the associated amount of fiscal risk. This is important to have some kind of firm understanding of what is the funding gap. And then accessing those additional resources is important, but also the ability to get things moving, to get the disbursements done. And this requires a new set of financial preparedness to national disasters as they happen, and to gear up the entire administrative structure to be able to deliver this. Also need to establish a risk retention and risk transfer strategy to build the financial resilience of the government and also of the population against natural disasters. This is important so that there is a common ground and commonly held approach towards these matters. The infrastructure gap in Pakistan is already substantial. We also suffer from inadequate M&R. A lot of the development expenditure is actually rehabilitation of existing infrastructure, which is largely neglected. And there's some questions of political economy behind that. So reinvesting in our existing infrastructure to make it more formidable, to make it more resilient, managing it well, both in terms of its maintenance, repair, but also operation and maintenance is an important area which is to quite an extent neglected. And then to add on to this the resilient infrastructure, we need to have a very clear framework for public investments and investments in partnerships, so on, also for private investments. In my view, there are 5 key things that we need to do to address this challenge that we have. We need to comprehensively address the financial resilience of Pakistan to national disasters. So this is a whole of the government approach across government, across ministries, to be able to have a financial resilience architecture. Then number 2, to increase access to immediate and long-term financial resources in the aftermath of disasters. So that quick access is also very important, but it should be in a long-term framework so that the need when it arises is immediately addressed. Then also to identify the key risks and the key priorities for a national disaster risk financing strategy. And then to also work on the various disaster risk financing instruments. And here a lot of work needs to be done because these are underdeveloped. Our insurance side needs a lot of work ordinarily also in terms of disaster risk financing. The insurance industry has to become much more resilient itself to be able to do that. So these appropriate instruments, along with systems and processes which would make these instruments work. To implement the strategy is also important that there is sufficient training, awareness, knowledge among the leadership, both at the political level as well as the institutional level. In particular, in the Ministry of Finance, the Ministry of Planning, the Disaster Risk Management Authority, and also other key agencies. Particularly, I would cite the provinces and the special areas. Sometimes they are missed in this partnership. And this brings me to the huge requirement for interagency coordination, not only within the country, but also with other stakeholders external. And capacity always remains an elusive kind of area, but capacity is not only within the institutions, but being able to network capacities and tap them wherever they're available. NDRMF has a huge responsibility. Even though it's a company of the government of Pakistan, a lot of their task is meant to support financing for disaster resilient projects. But because of its the particular mandate it has and its abilities, its capacity and its focus, I would also imagine that they will be the key agency providing the spade work, the intellectual effort, the thought process leadership on how to deal with this issue. And it should be guiding through the Ministry of Planning, the rest of the government on what needs to be done. Of course, the Ministry of Climate Change also works in tandem. They have a responsibility in this regard as well. I would have, I'm sure that this webinar must have debated about the enabling environment that is the key theme for this discussion today. It must have a very clear sense of how do we use the new instruments, what is the application requirement, how does it get utilized. State Bank of Pakistan would have an important role in this. These Securities and Exchange Commission of Pakistan would also be a partner, and the system has to be geared up. So I'm glad that all the key stakeholders are here and they are deliberating this, and what should emerge from this is if it's not an action plan, at least a draft plan, which can be again looked at, debated, and finalized at the governmental level. Finally, I would say that for Pakistan, it's imperative that the reduction in disaster risk is undertaken in alignment with our development goals. We have a huge way to go. The poverty situation post-COVID is a big challenge. The country is also in a stabilization program, and that adds to the complexity of what we're trying to achieve. So we need to harness all the resources, all the minds, all the capacities, and everybody put them together to work in a common direction. Thank you very much.
Thank you very much, sir. Thank you for your presence and, of course, your insightful words. And very rightly said, the 5 key things which you have listed out, and they are the critical components, which some of them are being developed and being undertaken by some of the institutions in the country. But I think we all understand this. So the several components needed to be further worked and further developed. I'm glad that you recognize the presence of all the key institutions in this webinar. And we do take your point forward that a draft action plan should emerge out of this exercise. And we, of course, are going to take the inputs, and then we have another meeting of, we have the NDRMF. NDRMF is facilitating this synergy group, and the meeting is taking place early next month. And all the key inputs which are taken from this webinar, they of course are going to be incorporated and feeding into that exercise. And the purpose and the goal of that meeting is to come up with an action plan. So I thank you very much. Thank you for your time, and thank you for your wise and insightful words. With your permission,
I would seek your leave. I have another meeting, and I wish you very well. Thank you.
Thank you very much. Thank you. Okay, thank you very much for all the presenters, and for your we have heard there's a lot to absorb here, and we heard a lot of insightful presentations with the very relevant information. We heard about the role of SECP, of course, as the regulator. They have a key role to play for establishing and creating an enabling environment for the corporate sector in the country, for the monetary policy. Similarly, we have been illuminated on the role of the central bank, the State Bank of Pakistan, and through their different mechanism and functions, how they are actually paving the way for disaster risk financing components to be established. And some of the work which they have already done, and one of the presenters very rightly mentioned that the work actually in the agriculture insurance, the yield bima insurance, it hasn't graduated to become a more widespread spread instrument. So, and then the reasons were also established. We have had a couple of presentations from our colleagues, the best practices and the experiences from international scene. And we see that especially when it comes to the forecast-based financing, it is workable, and some of those instruments are very effectively working, and we can learn from them and we can cover it. So I have a number of questions which the participants are. Thank you very much for the patience of the participants. They have stayed along. I already said we have a question from Afia Aslam, and she's questioning both the capacity of banks to assess project as environmentally friendly or otherwise. Similarly, we have a question from Dr. Hamid Jamali, ADPC, which is related to compliance to regulations and CSR unknown motivation for any organization. We need to go beyond this. Yes, that's true. Similarly, how many farmers, another question is, how will farmers be supported if there is any loss to their crops when there are two types of growers who are owners and growers who rent the land? This question is very much specific to, in the specific context of Pakistan. And another question is how many farmers are going to be to the formal banking channels, or how many farmers, particularly or small farmers, are being supported by the banks instead of middlemen sitting in the mandis. I think the questions have been shared, and anyone who wants to take up these questions, some of these questions are basically very much related to the banking or a kind of access of farmers to the banking sector, the formal banking sector. So we can have a few minutes just to have an interaction before we close today's session. Any volunteers?
Yes, I think I can respond to the banking related questions. If you allow me, is okay?
Please go ahead.
Definitely, there's a huge demand for agriculture financing, and State Bank is trying to promote financing in this area as well. Just to mention that we started agriculture financing in 2010. Basically, we allowed all the banks to lend to the farmers. Previously, only ZTBL were allowed to lend the money to the ZTBL. From 2010 and onward, aggressively, commercial banks involved in agriculture financing, and we set the targets of 100 billion, and we achieved that target. Just to share with you that during last 10-12 years, almost now outstanding balance for agriculture financing is more than 1 trillion. So this is the area which basically we are doing very well, but still we are not 100% meeting the demand for agriculture financing. And there is an issue of, there is mainly two issues. One is that farmers are not aware, and they don't feel, a comfort that they can borrow money from commercial banks as well. So that's the issue, and that's for this purpose the State Bank is conducting awareness sessions, designing brochures, disseminating informations, but still a long way to go in this area. But there is a significant improvement as well. The second thing is that the farmers, they don't have a passbook, and the passbook is issued by the revenue department. So once they don't have a passbook, that's why they are unable to get the financing from the commercial bank. That's why the farmer has to go to the middleman. So if the government is supporting in this area, and they issue the passbook, and we also launched a digital passbook project as well after the computerization of land record, because there is a land ownership issues as well. Once these issues are resolved, so then financing will be much easier. Anyhow, because of this NGOs, small electronic money, and this digital banking concept, we believe that the easy financing will be available to the financing to the farmer as well. I think there was a earlier questions regarding to the capacity building of the commercial banks to understand the environmental friendly projects as well. I do believe this is one of the main area on the both sides. When we say the both side, there are lack of capacity to design the project, to make a feasible projects, to make a business case for the banks so that the bank can understand those projects and then on that basis can lend to those projects. Because the vendors, the project sponsors, they don't also have a capacity to design such projects. That's why the banks are reluctant to lend money. On the same side, I do agree there is a lack of capacity at the bankers level. They can't understand the technology, the feasibility, and the project concept as well. For this purpose, in 2014-15, we arranged training sessions for all the stakeholders. But I personally believe that still more such training programs and awareness sessions are required to build the capacity of workers as well as stakeholders to design, understand environmental friendly projects as well, so that the funds can be provided to those projects. If there
Thank you
is
very
any
much.
other question.
Thank you, Dr.
Yeah,
Saab. We have two hands up. One is Mr. Ibrahim Mughal, and the other one is Muhammad Shaukat. Can I request Mr. Mughal to ask your question, please?
Thank you so much, sir. Thank you so much for conducting such very fruitful seminar for us. I am working as a national coordinator for environmental health at Ministry of National Health Services Regulation and Coordination. Sir, my request is that, we are very dedicatedly working on environmental health related issues, and we had prepared environmental health strategies in 2015. That was basically a regional plan of action from WHO to implement this plan across the country. But sir, those strategies are in cupboards. So my request is, especially because we have prepared for all provinces environmental health strategies dealing with the environmental health issues pertaining to climate change. Even we have prepared the EI strategies for Islamabad also. So that's a very comprehensive document, sir. So I'm requesting you, please make them a part of your plan of action to mitigate the issues relating to the environmental health, sir. And those strategies are with us. Thank you, sir.
Thank you very much. Your point is very well noted. Okay, we have two more questions, then we have to close it. Miss Azim, and there's another one, Dr. Sahus.
Yeah, hello. Who is the first? I am Dr. Sahu Shahid. I am from United Kingdom. Can you hear?
Welcome, Dr. Sahu.
Thank you. Thank you very much. I was actually very keenly looking all the proceedings, all the presentation, and I was really enjoying that. And a long time ago, obviously, I did my GIS and then progression in the management side of it. My question is, what are the initiatives in Pakistan with regard to renewable energy initiatives? Because I didn't see much on that. We have here in solar, we give grants to the end user. They install and government is supporting them. Just like they get loan, interest-free loaning, and it will have impact. And then we have here air source heat pump. I don't know if this is a new technology, and the ground source heat pumping. So they are generating a lot of energy through this source. And these are the green energy initiatives in UK. And I am also, obviously in my home, I have 2 or 3 different sources and relying very less on the fossil energies. So it is cutting down, first of all, my energy costs. Secondly, carbon footprint. And thirdly, helping the environment. So what are the initiatives by the financial institute? It is a reactive, is a proactive approach basically. But mostly what I heard, it's a reactive. Everything is after something happened. So what are the finance available for proactive initiative to reduce the risk of disaster actually to occur or minimize it at least? Thank you very much.
Yeah, thank you very much, Dr. Sahu. A good question related to renewable energy and the initiatives which are being undertaken in Pakistan. You compared it with the UK. I'll respond to that myself, but let me quickly go to Muhammad Shokat. I think yes. Muhammad Shokat Sabji, please. Shokat Sab, question.
Hello, sir.
Unmute yourself, Shokat Sab. Unmute.
First of all, sir, congratulations for arranging such a versatile and very literary webinar. As far as this disaster risk, I have not a question. I have a comment regarding this disaster risk financing related to agriculture. Since you know that Pakistan is an agriculture country and we need to implement this strategy somewhere starting from those areas or from those districts which are most productive as well as which are more vulnerable. We need to identify that within those vulnerable areas, that which are those people who are going to be most affected. And then what is their cropping calendar, and when they are affected, what are the hazards, what are the risks, and how we can assist them. If we can have such kind of a plan, I think that we can implement this very noble and very needful concept into our projects and program, and NDRMF can take lead on this. Thank you very much.
Thank you very much, Jay. Thank you. We have a question. We have Miss Azim.
Assalamu alaikum. First of all, I would like to congratulate all the team that we are doing splendid work. Secondly, I'm just a student of CSS and have given my written. What initiative I want to add to this, that first of all, Pakistan needs to work on the polythene bags, which is not decomposing and causing a lot of pollution. So we need to take initiatives like wind power, hydropower systems, and as we based on agriculture, we need to really focus on how we can focus on the footprints and the previous questions. And as Dr. Salim says, that a lot of initiatives can be taken, but strictly as I have worked voluntarily as well, but there are no complete initiatives that are constantly working on. आपके पास से एक प्रोग्राम निकलता है, गवर्नमेंट की तरफ से 2 प्रोग्राम्स निकलते हैं, and they are only basically focused on footages and coming on the media. That doesn't remain constantly in actual world, that how we can grow trees, how we can avoid this climate change. That's all from my side, but I'm so overwhelmed and so feeling blessed that I just joined the session and you people are there still in our nation to guide us with the best of the knowledge. I'm so thankful to you guys. Hats off to you people.
Thank you very much. Thank you. Okay. Quickly responding to the friend from UK for the renewable energy. Thank you very much. And you're absolutely right. The energy certificates and the kind of incentives in the UK are provided to the consumers level when it comes to renewable energy or the usage of renewable energy. In Pakistan as well, there's a government target, which is actually it's an international commitment which the government of Pakistan made to the UNFCCC, which is by 2030 to convert or to bring our overall energy needs to 50% to renewable. And there are very concrete plans towards achieving those targets, and a range of initiatives and a range of incentives being provided by the government for that. The one particular element which you mentioned is in technological jargon is called net metering, and that is also applicable in Pakistan. A number of households who have put up the solar panels on their roofs, and they are benefiting from this initiative. Shokasab, you mentioned about the vulnerable areas, the cropping calendars, and this exactly is the purpose of today's session. And as you might have heard from colleagues from SCCP as well as from the State Bank of Pakistan, a number of experiments had been done, and there had, with a fairly good amount of success as well. But one thing which has been recognized across the board is that a kind of a national level strategy in these directions or in these areas is lacking. And that gap is being filled by NDRMF with our national level disaster risk financing strategy, which we are developing. We are going to incorporate, and these are all these different institutions who have a much more active role to play when it comes to the implementation. They are very much partnered with us, and hopefully once this strategy is in place and we and NDRMF are able to bring all the nuts and bolts and the pieces together, I think this is going to address many of these questions which you mentioned in a reasonably effective manner. I'm not promising that we will be able to do it overnight. It's going to take us some time, and Pakistan, you know, that is when it comes to agriculture, it comes to a number of other areas. You know, there are a number of challenges and a number of institutions have to be roped in. They have to be become part of this exercise. So we are definitely going there. And to a last student from Azim, and I really appreciate your enthusiasm. And you mentioned about polythene bags. You know, you might have used this as one of a metaphor or a symbol, but a very real question, a real challenge as well. Yeah, you're absolutely right. You know, number of initiatives, a number of concrete steps has to be made. We are trying our level best from our end, and as you might have seen from today's webinar, is the number of others, institutions are also taking their share, and they are doing whatever is possible. I was about to close this session, but I can see a hand up from Dr. Wajid Naseem Jatoi. I believe, not I believe, but I know that he is from Islamia University, Bahawalpur. So Dr. Saab, you have a floor for maybe 1 minute.
Thank you very much, Dr. Bilal Saab, for giving me the chance for a quick comments. First of all, I would like to congratulate you for holding such a great event that is much dire need for the Pakistan perspective. I think so. So with this, we have a consortium on climate change, sustainability and conservation, in which we have more than 60 universities all around the Pakistan. And we have also some industries, some private sector, some research organizations working on climate change, food security, sustainability and conservation. And we have also working on different SDGs by United Nations. And I have also shared the link of consortium in the chat box so that I will also invite all the respective colleagues from different organizations to visit, as well as we have the collaboration, and that is open for collaboration all around the globe, not only from Pakistan as well. So we have also established the International Center for, recently we have established the International Center for Climate Change, Food Security and Sustainability at the Islamic University of Bahawalpur. And I will invite all the stakeholders, scientists, researchers, students to also visit, and we will welcome all the collaboration to work together in a practical way. Thank you very much, Dr. Bahut shukriya.
I thank you very much. I thank you. I very recently became aware of this particular group consortium, and I have seen some of their work, and wonderful work which they're doing, and actually going into a very action-oriented research to some of the very relevant challenges and the question in the climate change and disaster area in Pakistan. So thank you very much for your participation, Dr. Saab. Thank you very much, everyone, and thank you for your patience. Our next webinar is going to be announced soon. The 4th webinar. This is the 5 webinar series. Today was the 3rd one. So thank you for your participation, and have a wonderful day. Thank you.